I also believe, as I said now twice, that we are on a shift away from treasuries into precious metals as a store of value, which could be a massive injection into that market. And let's not forget that, over the past 120 years, right? Anytime 100% of countries that cross over the 130% debt to GDP have defaulted on their debt. And it's usually due to massive inflation, hyperinflation, instead of outright default. But whether it be a inflationary default or an outright default, every single country over the last 120 years that has gotten to 130% of debt to GDP has never come back. That's where we are. The US government really can't repay its debt, and default, in my mind, is inevitable. And as a result of that, holding US Treasuries would be as dumb as building a mud wall. So I think the alternative to the elite is gold, and it will soar. And I don't expect an explicit default unless, of course, Saudi Arabia and OPEC dump dollars as the store of value, or as the petrodollar, which I believe is highly likely, ultimately. And then you have a villain to point to for your default. It was OPEC and Xi Jinping and Putin. How could they do it to us? But I think if I were going to make a trend, the only trend I would add to Michael's statement, which I believe both. I think AI is certainly overvalued and could very well transition out of there as the economy starts. Money would transition as the economy begins to slow. But by the same token, I would say precious metals go higher. I agree. But I would also say that we will move into a period of time where treasuries are no longer the go-to store of value. Anyways, bottom line is that, yeah, I think that he's right. He's spot on. I think that one area is massively overvalued, one area is massively undervalued, and one area, the treasuries, is going through a once in a generation shift of recognition. And I think it's going to be a very bumpy ride. So when we talk about owning precious metals, Jesse, I don't tell people to do it to get wealthy. It is wealth. Wealth that has outlived every transition, 2 world wars, German hyperinflation, the Great Depression, every pandemic, and it will still be wealth when this situation ends too. And evidenced by the fact that the people who are writing the playbook, the central banks, well, they're loading up on it as if it was really important. So it's the suppression of the Western paper markets that has enabled them to do this without people catching on, because the price hasn't exploded, and in particular in silver.
Could we get into an arms race type situation where central banks are all trying to accumulate as much gold as they can, and there might not be enough physical gold to fill their orders at some point?
I think that's why they've used the Western suppression to run cover for their accumulation, which I would argue has been going on at least since 2017 or 18, when you saw the repatriation by the central banks from the New York Fed and the Bank of England, starting with the Bundesbank. And in 2018, all of a sudden, those banks bought more gold that year than they did in the 60 years previously combined. That would be like the Dutch National Bank, the Bank of Hungary, Turkey, the Czech National Bank. All of these countries have been on a buying spree, many others. On a buying spree, of course, China and India and all of those. But look, let's just, again, like I said earlier, from a historical point of view, using government treasuries and bonds as a savings vehicle is a relatively new concept in the historical context. And I think it's fading. And I think that already the elite have rediscovered gold is and has always been the premier store of value. And I think it's happening in a big way. And as you mentioned, last year, the central banks bought 37 million ounces of gold, a multi-decade record. Over the last 18 months, they bought more than in any time in history. And, so if you talk about this year, you're right. They bought 800 tons so far in the first 9 months of the year. That's up 14% year over year. Last year being the biggest year on record, and now it's up another 14%. And I think, in short, we're on the verge of this shift from in international finance, and gold is going to replace the treasuries, I think, as the premier store of value. And it is happening. And at the same time, these central banks not only have been voraciously accumulating it while using the suppression of the Western paper market to run cover, where you have 35 times leverage and you can short the market on paper and buy the physical really the whole world jumping into it because of the price going to the moon and attracting attention. In fact, quite to the opposite. The counterintuitive price action and the suppression of the market has enabled these big players to front run what is ultimately going to happen. And I don't think we've begun to really see anything yet as far as that is concerned. These traders are always way, way, way ahead of the curve. And when it breaks when there just isn't any ability for the Western suppressed markets to suppress in a naked fashion. In other words, it will be far too dangerous to sell short. Let me say what I mean by naked. Right now in silver, as an example, there is 1,700% more paper contracts than there are bars backing those contracts. In other words, it's rehypothecated 17 times. And so if for every one real contract that could be delivered in physical form, 16 won't be, or 17 won't be. You get paper settled, it is rehypothecated. And that's why we're already beginning to see in China, as an example, the Shanghai Gold Exchange has gold price, last I looked, at about $100 higher than the LBMA or the COMEX price. I don't care what these economists tell you is the justification. In my mind, they are trying to arbitrage slowly whatever is not nailed down. And they've already done a good job at pulling stuff out of the COMEX, out of the LBMA. They're pulling the physical commodities, not just gold and silver. You're seeing the industrial metals too, aluminum and zinc and copper. They're all being accumulated by these nations, and they're using the suppression of the Western markets to do it. At the same time, they're selling treasuries. So if anyone wonders why the treasury market experienced its worst year ever and the yields keep rising and the back end of the curve keeps rising, because they're all dumping their long treasuries. And even at a loss, I think they would rather sell them and shift and transition to gold before things get really dirty. So yes, I think that what we will ultimately witness is a moment in time where the rehypothecated levered Western paper markets will enable the rest of the world to siphon everything out of the weak hands of the West, and it will all move eastward. And when all of the metal is there, or the majority of it, where the Western markets are rendered neutered or a scam because of their hypothecated model, then you will see other parts of the world establish a more reliable and credible benchmark, whether it be in Abu Dhabi or the Shanghai Gold Exchange or the Moscow Metals Exchange. It will be that portion of the world, those who have been accumulating it all, who produce it all, who understand what it really means. They're going to say, we don't want to buy from your Western system anymore, and we don't believe in your Western system anymore. And in fact, we are going to implement our own system. And, you know, you can see how banks will arbitrage for a few cents a share, millions and millions and millions of dollars. Well, how about $100 an ounce? How about putting silver at $50 and watch what happens to all the silver over here that immediately arbitrages over there in a one-time shot to make these bankers very wealthy. And now we have stripped clean all of the physical silver and gold that will be available that would have been available for the people in this country who will wake up last minute and say, whoa, geez, you know, I better get something. And it will define this market, the inability to source product on every level. And that's when the price goes parabolic.